if you walked in to anybody in the street and said, hey, I'm heavily invested in an asset that is growing up 100% a year, should I be happy or not? They would say, you should be happy. I think Bitcoin's right now, it's like this Mag 7 startup where all of a sudden all the employees got insanely rich on penny stock options, but they can't borrow against them, so they have to sell them. And so they're selling. You want the early OGs that bought Bitcoin for $1 or $5 or $10 to sell some, or as much as they need to, so they feel comfortable. You want the volatility to decrease so the mega institutions feel comfortable entering the space and size. Assets like diamonds, assets like gold, assets like old masters paintings, assets like land, the Louisiana Territory, California, Mexico, all of Alaska. None of them have cash flows, right? A Nobel Prize, no cash flows. So the world's full of things that are deemed valuable in the world. They have no cash flows. And of course, as we know, the perfect money has no cash flow. If you live in a economy where the currency is collapsing like Lebanon and they freeze your bank account and the currency goes to zero, or anywhere in Africa, or if you lived in Argentina when the currency collapsed, then if you actually owned anything with cash flows, they're all worthless.
In today's video, Michael Saylor unpacks Bitcoin's natural cycle of hype, consolidation, and growth, and why short-term volatility is just noise against a 100% yearly surge. He explains how early holders are selling, institutions are circling, and why Bitcoin is maturing into the ultimate long-term asset. Stay tuned, this is Saylor's blueprint for Bitcoin's next phase. And if you want real-time insights, hit the link in the description to join our Telegram group.
I think there's a natural ebb and flow in the economy and in the community. And so Bitcoin surges up and has periods of extraordinary excitement, generates a lot of adrenaline and enthusiasm. Then there's a celebration, and then people extrapolate straight line to the moon. And then it retraces a bit and consolidates. And then people think, well, it's going to bounce back really fast. And if it chops sideways for a while, you know, there's always a natural human tendency to get frustrated. I don't think we have anything to be unhappy about. The truth is, if you zoom out and look at the 1-year chart, Bitcoin is like up 99%. It's like nearly double. So if you walked in to anybody in the street and said, hey, I'm heavily invested in an asset that is growing up 100% a year, should I be happy or not? They would say, you should be happy, right? It's just that the way that it gets there tends to be a bit volatile. You know, as for why, I think the why Bitcoin has been consolidating, building its support in the teens right now, is because you've got $2.3 trillion of Bitcoin that is unbanked. And so you've got a lot of people that own a lot of Bitcoin, but they can't get a loan against it. And because they can't get a loan against it, the only, at the point that you all of a sudden find yourself Bitcoin rich, but fiat poor, you don't have a lot of dollars, but you have a lot of Bitcoin and you can't borrow against it, then you think, I have to go sell it. So I think Bitcoin's right now, it's like this Mag 7 startup where all of a sudden all the employees got insanely rich on penny stock options, but they can't borrow against them, so they have to sell them. And so they're selling, and then people are saying, well, why are those employees selling the stock? Is that a vote of not confidence, in the company? And the answer is no. It's just they have kids to go to college. They want to buy a house, right? They want to live comfortably. They want to do something for their parents. And so right now, I think that the selling is crypto OGs that have had a lot of money for a long time. They're selling 5%, diversifying. They're doing something like that. And the market is absorbing all of that energy, building its support. The volatility is coming out of the asset. That's a really good sign. But because what you want for the asset to mature is for lots of long-term capital holders, the big corporations, the big institutions to buy, you want the early OGs that bought Bitcoin for $1 or $5 or $10 to sell some or as much as they need to so they feel comfortable. You want the volatility to decrease so the mega institutions feel comfortable entering the space and size. And the conundrum is, well, if the mega institutions are going to enter, if the volatility decreases, it's going to be boring for a while. And because it's boring for a while, people's adrenaline rush is going to drop. And it's like they had this big high and now the adrenaline is wearing off and they're a little bit bearish. But this is just a growing stage or, natural for the life cycle of an asset that's monetizing like this.
I've been to some events recently with TradFi folks, and it's always the same reasons that they bring up of why they're not investing in Bitcoin. It has no cash flow. Some of them actually who work in finance share that they are prohibited from purchasing Bitcoin. Can you speak a little bit to that and how much progress you think we've made in terms of the TradFi world and what needs to change for more people to embrace Bitcoin?
Yeah, I think there are a lot of assets, the greatest property assets of Western civilization, assets like diamonds, assets like gold, assets like old masters' paintings, assets like land, the Louisiana Territory, California, Mexico, all of Alaska. None of them have cash flows. Right. All of the great things we've acquired in life. Truthfully, if we think about what we want in life, whether it's a spouse, a marriage, kids, they have no cash flows. A house, no cash flows. Right. So the world's full of things, right? A Nobel Prize, no cash flows. Fame, no cash flows. Yeah. Yachts and jets don't have cash flows either. So the world's full of things that are deemed valuable in the world. They have no cash flows. And of course, as we know, the perfect money has no cash flows. The whole definition of money, a liquid, the most saleable asset. But if you want something to be money, you want it to have no utility value. Gold is better than silver because it has less utility value. And when copper or when you find something like silicon that has utility value of some sort, it becomes worse money. And so I think probably people say, well, we don't really think this is good investment asset because it has no cash flows. That's an opinion that has developed in 2 generations. Certainly since 1971, in the period, from 1971 on till today, I think the world developed a view, and its view was, long-term capital is a 60-40 mix of bonds and equities. And bonds had some dividend yield to them, and then bonds had some coupon, and equities had some dividend yield or some earnings. And that's just the way they saw the world. And eventually, the S&P 500 became the monster. If you look at index investors, 85% of indexes are invested in the S&P. So many people think long-term capital, what they think of as money held for the long term, is an equity index like the S&P index. Vanguard, they commercialized this and they made famous the idea of the Vanguard 500 and the Vanguard Index Fund. So when organizations are hyper successful with an idea like 500 stocks in a fund, and when the entire institution, right, the S&P or Vanguard or mutual funds, when they're built on that idea, when a disruptive new idea comes along that's even better, it's not natural that they would embrace the disruptive new idea. They're kind of stuck in their ways. As a practical matter, in a world of that's U.S. dollar, the U.S. economy is growing and the dollar is the king of the world. It's the world reserve currency. And there was no world war after World War II, right? Mm-hmm. So we haven't had a massive disruptive world war. Then you're living in a very particular situation, a particular time, and you could fall into in calculus, we call it a particular solution to a differential equation. If all of the boundary conditions are set, and if this, 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 then you can just plug in this number and you'll get out that answer. And that is true as long as you don't change any of the boundary conditions of the assumption. If you've got the solution for aluminum, and then I change the metal to steel, then the formula doesn't work. Mm-hmm. So at that point, you can't use a particular solution. You have to use the homogeneous solution. You have to be not the engineer, but you have to be the physicist. You can't be the trade craftsman with the simple lookup table of the answer. You actually have to derive it from first principles. So what you see is most people have never in their life had to derive anything from first principles. They've used the particular solutions given to them by someone that taught them the answer. And that breaks down when, for example, your entire currency collapses. For example, if you live in a economy where the currency is collapsing, like Lebanon, and they freeze your bank account and the currency goes to zero, or anywhere in Africa, or if you lived in Argentina when the currency collapsed, then if you actually owned anything with cash flows, they're all worthless. So the irony, of course, is one of these good traditional safe assets that generates cash flows. Well, not in Nigerian currency, not in the Bolivar, not in the peso, not in the Lebanese currency, not in the Iraqi or the Afghani currency. I can give you not in a Russian currency, before the collapse of the ruble that took place at the turn of the century, 96 or something. So the people that have these ideas, they have a particular set of solutions that work in a very stable, closed ecosystem that's never been challenged either with external stress or never encountered a new idea. When the people that will get Bitcoin will either come out of very chaotic environments, collapsing currency environments where they had to think for themselves, or they'll be at their base kind of scientists, first principles thinkers, people that question everything and rederive it. So I think the great irony is again the CEO of Vanguard saying Bitcoin is not an investable asset because it doesn't have cash flows, and then the largest shareholder of my company being Vanguard.
Ironic.
The most ironic outcome is most likely, according to Mr. Musk.
And that's Michael Saylor's take. Bitcoin's volatility isn't weakness, it's maturity in motion. As OGs rotate out, institutions step in, and the asset stabilizes, we're watching the foundation of the future monetary system take shape. If you found this valuable, make sure to like the video, subscribe for more deep dive Bitcoin insights, and join the community conversation. Links are in the description below.